Hello and Namaskar viewers, I am Sanjeev Pandya welcoming you to this week's edition of the Tax Talk with Ajay. Tax Talk with Ajay. That means it's all about taxes. This show brings you everything that you need to know about taxes, your personal taxes as well as your corporate taxes. If you're a business owner, small business, mid-sized, large-sized business, of course, we all have to pay taxes and you do too. So the show brings you all the latest that you need to know in any taxation matters. And the show is brought to you by one of the finest CPA firms in the state of New Jersey called SAI CPA services. With multiple locations, they can assist you in your personal tax matters as well as corporate tax matters, bookkeeping, payroll, virtual CEO, virtual CFO, and many more services, including IRS audit as well. So keep that in the mind, and their trained, experienced, knowledgeable, on-hand CPAs will guide you in the right direction. You can schedule a meeting by calling them at 908-380-6876 or visit their website sciencecpaservices.com. With that note, I'd like to welcome Mr. Ajay Kumar of Science CPA Services with over 25 years of experience when it comes to accounting, and they know that they do accounting right, and that's why they are one of the most popular and easily accessible and very efficient service provider CPA firm. Ajay ji, welcome to the show.
Thank you, Sanjeev ji, and thank you for the kind introduction. And you said it very well. There are a lot of good accountants out there. More than the competency is the accessibility.
Yes.
Where the clients are complaining today. I get more clients, new clients complaining that my CPA, my former CPA is not picking up the phone, is not responsive enough.
Yes.
That's the primary reason we get from the new clients.
You know, CPAs, I've seen some CPAs, and even if they are, let's say, one-man, two-man show or something, during a tax season, the phone rings and they ignore it, or let them leave a message, we're busy. That's not it's supposed to be.
But that's not how the business should
Correct,
work.
exactly.
People are calling you
Yes.
because they need help.
Correct.
Why would somebody be calling you if they did not need help?
Yep.
And when they need help, if you are ignoring their call, what type of business sense does it make?
Correct. That's why I say SAI CPA Services, not only the best in accounting, not only the best in customer service, but easy to access, and any kind of meetings available over the phone, in person, Zoom, anything that you like, just to help you with your taxes. And they always believe in doing taxes right. When it comes to taxes, of course, taxes that we pay or refund when we file a tax return, we get the refund. But there is something also called estimated tax payments. What exactly is estimated tax payments? How does it work? When are the estimated tax payments due? And who should be, or who are the individuals who follow the estimated tax payment matter? We'll find out more from Mr. Ajay.
Absolutely, Sanjeev ji. It's very important. I cannot stress it enough, the importance of estimated tax payments. So, as the name suggests, these tax payments are estimated in advance. So for 2024, you are supposed to be paying certain estimated taxes that you are estimating for the year by first quarter. So first quarter is due next week by April 15th. The way you are supposed to do it, you take a look at the last year's taxes, how much taxes you owed. Take a look at your current year's business forecast and then see how much taxes you would owe. You're supposed to pay at least 90% of your current year's taxes or 110% of your last year's taxes in 4 installments. So these installments are due every quarter. So the current installment is due April 15th, next week. The second installment is typically due June 15th. This time is being the weekend, is June 17th. The next payment, the third quarter, is due by September 15th typically. This time is September 16th, again because of the weekend. But at a high level, you see April 15th, June 15th, September 15th, and then January 15th for the fourth quarter. Look at your income, how you did in the first quarter. By April 15th, by April 1st week, you already know how much money you made, net profit. You know your income tax bracket based on the last year's taxes. Calculate how much money you would owe to the IRS, to the federal government, how much money you would owe to the state government, and make certain estimated tax payment by April 15th, please.
Okay, so these are the estimated tax payments that you talked about. Now, what kind of businesses require to follow the estimated tax payments deadlines?
I'm glad you asked. So a lot of people who have no business income, no side income, no large interest income, no dividend income, they don't need to worry about the estimated taxes. Estimated taxes comes in picture when you owe at least $1,000 in tax liability. A lot of people on W-2, if your W-2 is properly structured, you are paying taxes along with every pay stub. So at least in theory, by the end of the year, you have paid the required taxes. If you have multiple jobs, or if you have multiple sources of income, husband, wife, both works, there are cases when you will still owe money based on the W-4. In those cases, you should update your W-4 to reflect that you have multiple jobs or you have both spouses working. In many cases, it may make sense for you to show as a single filer on your form W-4, even if you are married and doing married filing joint tax return, to ensure enough taxes are withheld through your W-2, so you don't have to worry about the estimated tax. But when it comes to estimated taxes, it's mainly for self-employed people or people who have side income, not typically used for W-2 type of people. Anybody who has any type of business income, it doesn't matter where the business income is coming from. It could have been LLC, S Corp, C Corp, proprietorship, partnership. If you have additional income coming from another source other than your W-2 job, where the taxes are not withheld at the source, then you, the recipient, the taxpayer, have the obligation to pay certain estimated taxes based on the income that you are expecting to be received.
All right, so basically people who are self-employed, people who are on 1099 and consultants, and those are the ones required to pay.
You're 100% right.
All right, so in a very layman language, and again, this is from, let's say, viewer's point of view, my simple question to you is that those people who are self-employed and may or may not be making that kind of money, why would government want them to pay quarterly taxes instead of having pay them annual tax?
Very good question. So let's say if you have a side business, if you have an LLC, S Corp, whatever type of business you have, and you are making $100,000 on this business. In that case, let's say at a high level, you pay 20,000 taxes to IRS and 5,000 taxes to the state at a high level, just to keep the numbers rounded. In that case, if everybody in the government, if every taxpayer started paying towards the end of the year, then government wouldn't be able to function. Salaries have to be paid monthly. Bills have to be paid monthly. All the tax, the whole system requires certain amount of payment.
Also, this is from government's point of view, that they want to have their cash flow,
This is their
just
rule.
like any corporation, any company would have a cash flow, monthly income, quarterly income.
If government could push it, they would want it monthly.
Okay.
But after much back and forth, government wanted it sooner, the taxpayer wanted it as late as possible, and of course, why not? And then the rules were decided to make sure payments are made every quarter, so government can function, the salaries can be paid. This is the main source of income for the government. If everybody paid, and then unless the government charges some interest and penalties, a lot of people want to file the extension and not pay the taxes. And that's where the rule was enacted, that extension is only for filing the taxes, not for making the payment.
Correct.
If you owe money, you're expected to pay the money at the time of filing the extension, not later when you file the taxes. So all these rules are made by the government in order to achieve certain things that the government wants to achieve.
So for this matter, government runs no different than any other company runs,
Well,
for cash flow
it's a
matters.
structure.
For cash flow matters.
Absolutely, it's an expense structure that everybody has to manage.
Okay, all right. Now, having said that, how are these estimated tax payments are calculated?
Great. So there are several ways to do it. First potential option is you look at your last year's tax liability. How much did you owe? If you owed $20,000 to IRS, and if your income is expected to be similar this year, then you know you will owe another $20,000 this year. That means you should be paying $5,000 per quarter for the next 4 quarters. So first potential option is you look at your last year's tax liability. Second potential option is if you have a business and business is big enough to do the forecasting, you look at this year's income projection. You see how much income you will have for 2024. You know what income tax bracket you will fall in based on the income. The IRS has published list, and then you can calculate based on this income projection, I'll have this much tax liability, and that's why I'm paying every quarter. And you check this projection every quarter. If your income projections are changing, increasing or going down, accordingly you can adjust the estimated tax payments as well. Or another option, you see year over year change. Last year I did not owe anything, but this year I'm expecting $10,000 of 1099. So I may owe $4,000 in taxes, including self-employment taxes. In that case, I should be paying $1,000. So there are several ways to estimate this quarterly tax payments.
Okay, very nice. Now, before we go into the break, literally we have 1 minute. My question to you is that after after getting all the information from you about estimated taxes, my last question to you is that can there be an extension to this estimated tax payment deadlines?
No. These estimated tax payments are due when they are due. People do miss them, and my suggestion is whenever you get around doing it, if you missed the April 15 deadline and you are expecting money on May 1st, make the payment on May 1st. If you can afford to do it, since you are making the first quarter's payment late, try making the second quarter's payment earlier. So in the system, in the tax software, you put in the date, the amount. So it's okay to miss a payment or two here and there, but try to catch up to those payments as soon as you can.
Okay.
And there is no extension around it.
There is no extension. You cannot have an extension. Okay. All right. Having said that, it's time for us to take a break. Remember, this is the Tax Talk with AJ, and when we come back, we're going to have a more on the same topic as well as the other topic for you in this episode. Stay with us.
Did you know how many self-employed people are there in this country? Based on 2023 data, there are 16.1 million self-employed people in this country, and the average income for the self-employed people is almost twice that of national average. No wonder being self-employment is the right thing. We live in the country of opportunity. If you have not looked into it, please look into finding a second source of income.
Well, just like, W-2 employee, of course, self-employment individuals also comes with some, responsibility also.
Absolutely.
It's not that easy. Yes, they make more money, double than national average, right? So suppose, for example, if national average is $50,000, then self-employed people make $100,000 a year.
On average, self-employment people are making $84,000 per year.
This was just an example, but what I'm saying is that it also comes with challenges
100%.
and a responsibility, because you got to be steady in the business, you got to have steady clients, you got to have that income flow coming in. So these are the challenges. But anyway, let's continue to move on. Now again, going back to this, estimated tax payment, and can there be an extension into estimated tax payment? I think we are missing one piece of that.
There is no extension for making the estimated tax payment. But just to clarify here, when you are filing the extension for your regular taxes, if you owe any money, that needs to be paid as an estimated taxes. So estimated tax payment is must at the time of filing the extension. Again, if you owe any taxes, the tax payment needs to be made along with the extension filing. There is no extension for making the tax payment. All the extension that we talk about, federal extension, state extension, all sorts of extension are only for filing the taxes. Tax payment, annual tax payment, quarterly tax payment, estimated tax payment does not come with any sort of extension.
Okay, excellent. Thank you so much for clarifying it. All right. So after having heard about estimated taxes, from AJ, now if estimated taxes are paid by the individuals who are self-employed, let's talk about a topic related to that matter, self-employed, and there is something called self-employment tax. What is that and how is that different than the estimated income tax?
Wonderful. So in general, when we are talking about the estimated tax payment, we are talking about the tax payment that a taxpayer would owe. And generally, all these conversations, the income tax bracket and federal government doing this thing and the state government doing this thing, they're all about income tax rate. Income, and then you have a tax based on that income. A lot of these people are not talking about self-employment taxes. Self-employment taxes are FICA taxes. They are Social Security and Medicare. When it comes to Social Security, 6.2% is paid by the employee, 6.2% is paid by the employer. But when you are working for yourself, self-employed, you are the employee, you are the employer. So you end up paying 12.4% into Social Security fund on the net income that you have from the self-employment. Similarly, 1.45% is paid by you in terms of Medicare taxes, and 1.45% is paid by the employer. But again, you are the employee, you are the employer. So on self-employed earning, on Schedule C earning, on LLC earning, you end up paying 2.9% in the Medicare fund, 12.4% in the Social Security fund. So 15.3%, this amount is referred as FICA taxes or self-employment taxes. Just remember, this is in addition to the income tax. Take an example here quickly. If you have a side business and your Schedule C income is $100, side business income is $100. On this $100, not only you pay the income tax, let's say 20% in your income tax bracket, you end up paying additional $15
Yes.
to the federal government
But
on self-employment taxes.
correct.
That's $35 right there.
Correct.
So you have to factor self-employment taxes when you are calculating estimated tax payment. Estimated tax is estimating the total tax liability. How do I estimate my total tax liability? I have to factor in the income tax as well as the self-employment tax if I have the side business, Schedule C, LLC, and whatnot.
See, I told you that self-employed individuals comes with challenges.
Of
A little
course.
while ago, you said that self-employed people make twice as much more than national average, but they also pay high taxes.
Of course,
15%
you have to
in
know what you have to sign up
FICA.
for.
Correct.
You have to know exactly what you're getting into.
Yes. Now, self-employment taxes, you explained it very well. How does that work? Are they due certain time or they're only due at the end of the tax year on a return?
So self-employment tax is one type of tax, like income tax. So you factor all taxes, self-employment tax, income tax, add everything together and then divide it by a quarter. So when you are computing your quarterly estimated taxes, you are looking at the self-employment tax as well as the income tax, and the deadlines are same for estimated taxes, which is April 15th, June 15th, September 15th, and January 15th. When you make the payment for April 15th, if you have LLC earning, side business, Schedule C, whatever earnings you have, you look at how much is the self-employment tax going to be on this earning, how much is the income tax going to be on this earning, and you make payments accordingly to the IRS and the state.
Okay, all right. Any deduction that they can get, any tax deduction for the self-employed people?
Well, you typically have 50% of the self-employment taxes that you pay that gets offset against your total self-employment income, but you don't have to worry about it. When it comes to the estimated tax payment, Sanjeevji, you want to make $1 more payment than $1 less.
Okay.
At the end of the year, if you have paid slightly more than what you should have paid, you have the right to refund, or you can apply it to the next year. If you pay less than what you should have paid, IRS is happy to charge you interest and penalty on it.
Okay, all right. Now, all these things you explained very well, and that's exactly how it works. But obviously, this is kind of, disturbing to hear that you have to pay so much taxes, estimated tax payment and self-employment tax. My question to you now is that self-employed individual, even after paying all the taxes, are they entitled to get certain deductions as part of their business, or is it same when it comes to travel and meals and vehicle use and all those categories?
I'm glad you asked. So there was a change in the tax law in 2017. We call it TCJA, Tax Cut and Jobs Act. With that act, anybody who has a W-2 job, they are not allowed to claim the meals and entertainment and the job-related expenses. That section has completely taken out of the tax system. If you are self-employed, you can claim a lot of these expenses, all the business-related expenses, travel, meals, client
Marketing,
advertising,
stationery,
utility, office rent, whatever business expense, buying the laptop, internet, TV, if you have TV at your office. So there are a lot of expenses. It opens up a lot of room for you to claim certain expenses if you have business, and as long as the expenses are related to that business.
Okay, so in a way, it's not that bad, because if you're paying more taxes, just like we calculated 15%, 15.3%, and I'm sure the tax bracket must be higher. IRS also gives you some room where you can claim some deductions and reduce your tax liability.
Absolutely, I think there are a lot of benefits for self-employed people, not just on the expense side, deduction side. Even when it comes to the retirement contribution, you have a lot of plans, SCP, 401k, defined contribution, defined benefit. Those plans are only allowed for self-employed people or for business people who owns businesses. A lot of these plans are not available for W-2 type of jobs.
Okay.
So you have to know what you're signing up for. When you are self-employed, it's a 24 hours job. It's not 9 to 5 anymore.
Yep, absolutely.
You make more money, but you're signing up for a lot of responsibility, a lot of compliance around it. So you have to see what fits in your situation.
There's no pain without gain, there's no gain rather without pain. So everything comes in a territory. So I always say that for your tax matters, personal taxes, corporate taxes, reach out to SAI CPA Services. I want to add one more line to it, that if you are in business, you are self-employed, and you want to make sure that you're getting right deductions, you are claiming those deductions right, and whatever your tax liability is the accurate tax liability, more or less. Refund, no refund, that's a different question. But is your tax return filed properly or not? For that, you can always reach out to SAI CPA Services and have it consulted by an experienced CPA on hand at SAI CPA Services. Once again, they can be reached at 908-380-6876 or saicpaservices.com. We thank SAI CPA Services for sponsoring the show Tax Talk with Ajay every week right here on ITV Gold. Mr. Ajay, thank you so very much. And now it's time for the fact of the day.
So today's quote is, it's not how much you make, it's more about how much you keep. And that's where the tax angle comes. Doing it right. If you are paying more than your fair share of taxes, IRS will never come back to you and say, this is what you paid me extra. If you pay less than what you should have paid, they are happy to send you a notice, they're happy to collect the money. So it's more about how much you are able to keep as opposed to how much you are able to make.
Okay.
Keep that in mind.
Very good. Thank you so very much for that quote of the day. And once again, thank you for your time and the guidance. I am Sanjeev Pandya, wishing you all happy and tax-free days ahead. Until we meet again, same place, same time. You do take care of yourself. So long.
Thank you.